Your note out this morning caught our attention. You said, get your popcorn. It's showtime here. You're looking at the S&P 500. Again, we've had, 15% of the S&P 500 earnings. And if Microsoft, I think at least as far as the expectations in the print, the stock ran up into it. And then you just saw after the close, people wanted to be positive. But then when they got the guidance, the realization is that it's going to be a tough slog. Talk to us how this resolves itself in the S&P 500. You've been charting this here. We know that we've got a series of lower highs. We've also now had a higher low here in the S&P 500. So we're making a little bit of a flag or a pennant or something like that formation. Talk to us about the S&P 500.
Sure. So it represents almost a perfect instance of equilibrium where buyers and sellers are matched off. No one is in the ascendancy. Typically, right, in a big bull phase, bulls are in control. In the ascendancy, in a bear phase, the bears are in control. And now we have equilibrium. And in many ways, it could just be that the market belongs here. But if you look at these lines, they are very precise. Look at some arrows if we put these in just to annotate it. We're at the end of the runway. There's no more time here, right? And so even sideways would resolve it in the sense that if you keep going sideways, you will be outside of the apex of the formation. My own bias or hunch is that we go lower, we break to the downside. But I think really it gets back to, and I'll just repeat myself because it's sometimes you can, it's choose your own adventure. Which do you think? But I think, again, 85 to 95% of the odds sideways to down captures 85 to 90%. The case for up, it seems muted. And here's the other thing. You often get bull traps. Let's say we go above the line a little bit. And you draw in a lot of people only to have it crap out, as the expression goes in the casino. I just don't see up meaningfully as a scenario that's likely. So sideways to down, I think, captures the preponderance of the odds.
I'm with Carter. I think we've been pretty clear on that. This is this pennant formation. And listen, you could see sort of that false breakout. We've seen it happen in other things before, and I think you'd probably suck a lot of people in. But, the importance of Microsoft cannot be understated. Obviously, we're going to hear from some other companies as well. The market's still expensive. And on top of that, we had Marko Kolanovic on last night on Fast Money, who, people will say that he's another one of the perma bulls out there. It's factually inaccurate, but, he had been bullish for a period of time. I mean, that was about, Dan, as cautious as, it's probably about as cautious as he's ever been since we've known him in the market. And you think about the role that he plays at the bank that he works for, JP Morgan, to make a call like that, and in a word, is pretty ballsy. So, I think you have to listen to what a lot of these folks are saying.
Yeah, well, listen, make no mistake about it. While I also lean to the downside here and position that way, it's kind of been a little bit of painful. I think many of our market call viewers know that I've kind of detailed a handful of my bearish trades in the options market over the last couple of weeks, and basically all of them are losing. I detailed a QQQ put spread in February expiration. I was looking at the 285, 260 put spread. It cost me a little less than $5. That's a 25 wide, and that's 20% of the width. And so that one's a little bit in the money now with this thing. I'll just say this, though. I mean, the Microsoft action, Microsoft could close unchanged on the day. That's not bearish. Let's just be clear. The company narrowly beat lowered guidance, and then they guided lower, and the stock has been, in a big range, since the aftermarket. And then this morning, the fact that it's down less than 1% is not bearish, in my opinion. That's not bearish price action. So the QQQ, though, to me, is the one that I kind of want to lean on. It just feels a bit heavier, especially when you look at the knock-on effect of like a Google down 3% and still down 3% today.